Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Renu Baid of IIFL is with us. Renu, quickly your thoughts on L&T. The stock of course has done well so far, but what are the key numbers to watch and what are you recommending investors to do?
From L&T's perspective, I think this quarter should be a good quarter. The execution momentum which we saw in the previous two quarters should broadly sustain in the domestic market. But more importantly, I think the concerns that investors had on order inflows being relatively disappointing this year because of elections, I think the front ending of inflows will address those concerns. And the order book visibility is good enough for the next 1.5 to 2 years for them. So I think numbers should be good in terms of execution, double-digit growth coming through, margins expanding. And gains coming in from Kattupalli port should further help offset any kind of impact that could be there because of change in the accounting policies for the realty business for them as well.
More upsides on the stock, you think?
Yeah, definitely. We have a target price of 1638, which implies almost 20% upside from current levels.
So I want to know what could trigger that upside. Is it going to be, I mean, obviously, if there's any kind of a revision on the guidance, upward guidance, that will be an absolute bonus. But what should be the key watch point in terms of the stock price trigger? Should it be margin expansion? Should it be continued visibility on orders?
I think margin improvement should come through this year, but more than any other element, I think one will have to look at how the execution of the core domestic market improves. And order inflows, in my view, should continue to remain healthy in the next couple of quarters as well, though not sustaining the same momentum in terms of the bulkiness of orders that we have seen. But divestment and deleveraging of books, which they have spoken about, those two other elements will help the ROEs improve. So I think those will be the elements to help Larsen outperform at the expected levels.
Okay, I guess the inflection point was when the management spoke last quarter around and they said they're looking at FY19 with a lot of optimism. Since then, actually, the stock has been on an uptrend. But thanks, guys, for joining us and giving us those expectations. We'll take a short break, but back to earnings reactions on the other side. Keshav Bhajanka, the Executive Director of Century Plyboards. The market virtually at all-time highs. How are the trends looking? As promised, we have Lawrence Balanco of CLSA who joins us on the phone line. Lawrence, hi, good morning. You did speak to us earlier about resistance levels on the Nifty. Since then, every resistance level has been conquered, whether it's 10,750, 10,800, and now we're almost at the third resistance level of 11,185. What's the sense you're getting? Do you think it's just onwards and upwards from here on the index itself? And what would your markers be on the upside now?
So we're still looking at 12,000. That's been our long-standing target, and that's where we think this trend can extend to. So right now, momentum still constructive, and yeah, we think we'll clear the January highs and head towards the 12,000 target.
Okay, Lawrence, morning. That's interesting. So you're retaining your target. Now, this rally on the Nifty has been driven by just a clutch of 6 or 7 stocks. You know, some of the financials like HDFC Bank have been strong. Reliance has powered through. So as we're looking at this 12,000 target, will the leaders remain the same? Will these be the key stocks to watch then?
Yeah, I think so. I mean, you've seen it in the US too, where the gains have been driven by some of the large cap tech stocks in particular. And the Nifty's advance hasn't been too dissimilar, with a handful of stocks driving it up. And to get to that 12,000 target will still be the leaders. We don't think you get a late rotation at this stage. So toward the 12,000 targets, leadership should remain intact.
Okay, although the Nifty has been moving up, the Bank Nifty has been struggling to get above that 27,000 mark. What would the long-term targets be for the Bank Nifty? And do you see some of these large cap banks participate and emerge as leaders on the upside? Some of them have done pretty well this year, but you know, largely it's just been restricted to names like Kotak Mahindra Bank, etc. What do you see as the texture here on?
Again, because we're sort of late cycle, it's very rare to get broadening of participation at this stage of the rally, so it should remain a concentrated move. But as far as upside targets for the Nifty Bank, we're still looking at above the 30,000 level. 31,500 has been our target for some time, but I wouldn't be expecting a broadening of participation at this stage.
Lawrence, the positive view on India, the 12,000 target on the Nifty, is that in sync with how you're viewing some of the other equity markets around the world as well? For instance, I mean, is there a direct correlation between us and how you would expect the S&P 500 or the Dow to behave?
Well, at the regional markets, the Nifty's acted more in line with what we've seen in the US markets. But what we've been highlighting across global markets is that there's a number of distinct sort of characters that we've seen, and you can basically split up markets into three groups. The groups that are still remaining in the uptrend, which obviously the Nifty falls into that with the US markets. Then you have markets that are still stuck in trading ranges like Taiwan and a number of European markets. And then you've had markets that have broken below their February, March lows and their 200-day moving averages, and those are the markets that have been weaker and that have underperformed. So a number of the Southeast Asian markets would fit that characteristic. So again, it's quite a concentrated global move rather than a full participation move that we saw between 2016 and 17. So the message is it's selective what is moving forward.
Have you noticed the return of foreign flows into the Indian markets, Lawrence? Because that's what we're seeing in the data that we get. 3 out of 4 days we've seen FIIs buy into this market. How are you reading into those trends?
Yeah, I think that's one of the key things that we saw roughly 3 weeks ago, where India, and this is looking at the MSCI India in dollar terms relative to the emerging market benchmark, actually broke the downtrend that you'd been in for the past 18 months. And that relative outperformance by India to the emerging market benchmark has encouraged emerging market investors at least to add exposure to India.
Okay. Lawrence, what are the charts suggesting on the dollar and, of course, on crude as well? Is there a possibility of retesting the earlier highs, 80, maybe even 80 plus?
So, yeah, looking at, or starting with crude, we've seen slowing upside momentum. So our best case scenario is that you see this trading range continue to develop basically between 72 to 80. Our bias, though, with the slowing upside momentum is that we go down towards the $65 area. So we think out of the commodity space, oil looks toppy here. But if you look at the other side of that equation, copper, we've seen some bearish extremes. We're back at the 270 support area, and we think that can rebound to $3. And similar in gold, that we've seen some bearish sentiment extremes, oversold conditions. So like the equity market, within the commodity market, you do see a dispersed setup of patterns across that. Oil looks toppy here, where copper and gold look oversold and bearish extremes that should set up for a rebound. On the dollar, if you look at the dollar index, for example, you're still capped out at the 95 resistance zone. You've got slowing upside momentum, so we think the dollar strength stalls here, and we pull back on the dollar index to 92. What that would mean for the Indian rupee is that we basically see a pullback in the rupee, where it's capped at the 68, 69 resistance zone, and we see a pullback to 66.5 to 67.
So if you are optimistic on the markets, you do mention that emerging market foreign investors are now increasing their exposure to India. What would make you raise your targets on the index? I mean, would you want to scale it up at any point in time above that 12,000 target that you have?
At this stage, we don't have any price data that can give us a higher target than the 12,000. So what we'd expect is to get up to the 12,000 points and then see some hesitation in markets and some kind of consolidation pattern where we can work on for broader upside targets. So at this stage, yeah, we don't see any evidence to increase that target from the 12,000 point.
Okay. Lawrence, not sure if you would have had a look at individual stock charts for India recently, but if you could sort of share with us your view on something like Reliance Industries, perhaps?
Yeah, I mean, I looked at the charts. What we can say on what we've seen, similar to the market, we had consolidated in a range since late December 2017, and the breakout from that range basically suggests that we can move up to the 1250 area as an upside target here. Momentum still confirming high, so like the Nifty, uptrend intact with momentum confirming the move.
Okay, 1250 area on Reliance Industries. A standard disclaimer there, of course, owner of the channel that you're watching. Lawrence, I just had a quick query on the MSCI EM technical chart. How does it look, and how does China compare to India? I mean, which looks like the more attractive chart from now until the end of the year?
Well, you had India in this clear uptrend, and the relative outperformance started, like I say, 3-4 weeks ago. If you look at the broad emerging market index, we finally found support around the 50% retracement level. of the move off the 2016 low. So we have found some support, and that's similar to the China market, where we found support basically back at the mid-2017 highs. So China right now is consolidating after sort of a near 20% decline that you've seen off the January highs. So from a trending aspect, the Nifty still, the Indian market looks more appealing on that basis.
All right, Lawrence, we'll leave it on that note. Thank you very much for joining in with your view and your call on the technicals. That's CLSA there for you. By the way, those are not very comforting numbers from Karur Vysya Bank at all. There's an increase in bad loans of about 500 crores. That's the absolute increase, the gross NPA number. The percentage has also gone up. Provisions are elevated. Profits are down, whichever way you cut it. This is not looking very good. And the reaction is on the stock, down about 1.5%, 2% right now. That's Karur Vysya Bank for you. But speaking of earnings, of course, Sonia, I guess the big one today to watch out is going to be Hero Moto, whether they will come out with a better performance than the howler that Bajaj Auto sort of surprised the street with.
Yes, you know, for Hero Moto, it's expected to be a stable quarter. They've largely been unruffled by the price movements that Bajaj Auto has taken. You know, Bajaj Auto has done a lot of price cuts till now. Hero Moto has not responded at all. So stable set of numbers for them. Volume growth, in fact, has been quite good for Hero Moto Corp. It's been about 14-odd%. Revenue growth will be strong for them, and because of that, you know, overall performance will look good. The only problem is raw material cost pressures have hit the entire industry. They'll hit Hero MotoCorp as well. Because of so much competition, Hero MotoCorp has not passed on the raw material cost to the consumers in terms of price hikes. So that is what they will absorb this quarter. But I just expect about a 20-30 basis points impact on a quarter-on-quarter basis because of that. We've also seen some discounts, some schemes given across the industry, so that could impact them. But the stock is very attractive now. If you look at a valuation analysis, it's trading at just about 12-13 times forward versus historic average of 16-17 times. So it's trading at a 52-week low with such stable numbers. So there is room for upside if there is a positive surprise.
Okay, so that's going to be an interesting number to watch out for. Absolutely. On that note, we have to wind down Bazaar. And as we do that, we will leave you with a quick wrap of all the big voices you've heard on this show. Thank you for watching. Keep it with us. Chartbusters coming up next.
We will have wage hikes in H2, in Q3 and more in Q4.
Now the valuation froth is out, so it's a good time to look at mid-caps for sure.
The board has appointed me for 5 years, subject to the shareholder approval as well as the IRDA approval.
In this fiscal year, we should see a year-on-year growth of about 7%.
So I think during the second half of the year, we should be able to maintain strong growth numbers. They should be in the high 15 to 20% bracket.
We're still looking at 12,000. That's been our long-standing target, and that's where we think this trend can extend to.